Here's a detailed summary of SoundHound's Q3 2025 earnings call transcript, suitable for reading aloud. Intro music fades. Good afternoon, everyone, and thank you for joining SoundHound's third quarter 2025 earnings conference call. I'm Scott Smith, Head of Investor Relations, and I'm here today with our CEO, Keyvan Mohajer, and our CFO, Nitesh Sharan. We'll begin with some prepared remarks before opening the floor for your questions. Before we dive in, please be aware that this call will contain forward-looking statements. Actual results may differ materially from those projected. For a detailed discussion of risks and uncertainties, please refer to our SEC filings. We may also discuss non-GAAP measures, which are detailed in our press release. All forward-looking statements are based on information available today, and we undertake no obligation to update them. This call is also being webcast, and an audio replay will be available. And now, I'd like to turn the call over to our CEO, Keyvan Mohajer. Keyvan Mohajer, CEO. Thank you, Scott. And thank you all for joining us today. Q3 marks another quarter of precise execution against our plan. Global enterprise AI adoption is booming, and SoundHound is strengthening its leadership position. We're anchoring our deployments in millions of endpoints across highly diversified industries, with significant potential ahead. This year, in just the first 3 quarters, we've achieved a record $114 million in revenue, a remarkable 127% year-over-year increase, and we are raising our outlook once again. This quarter also marked our 20th anniversary. From a Stanford dorm room, our mission has been to voice-enable the world with conversational intelligence. Our long-term focus and strategic execution have truly paid off, as the opportunities before us are advancing at an exponential rate. Our 2 decades of technical innovation have given us the speed and agility to capitalize on these opportunities. We've achieved market readiness rapidly, unlike many still in the experimentation phase. We are in the market, achieving real success and creating measurable value. We pioneered speech-to-meaning over 10 years ago, and a decade ago, we were the first to enable the processing of complex, compound conversations, paving the way for today's leading agentic experiences. We were also one of the first to go into production with a voice-enabled generative AI assistant in automotive, and this year, we launched Amelia 7, our fully agentic platform for enterprise businesses. Crucially, our mature platform and years of IP accumulation allow us to combine deterministic flows with machine learning models, addressing the reliability gaps in pure ML deployments. This enables faster deployment, quicker scaling, and avoids the exploding model costs many are facing. Let me highlight Polaris, our multimodal, multilingual foundation model. It continues to prove its superiority in accuracy, speed, and cost. Transitioning Amelia clients to Polaris reduces error rates by up to 3 times, thrilling our customers, driving down engineering and hardware costs, and accelerating iteration cycles. We're also innovating in language support, rapid model customization, and efficient training methodologies that reduce cost and data requirements while improving accuracy. Importantly, we offer deployment flexibility, cloud, on-prem, edge, or hybrid. Polaris is a significant disruption widening our competitive gap. Our acquisition strategy also demonstrates repeatable success. Within 12 to 18 months of key acquisitions, we've converted pre-merger declines to post-merger growth, turning them into leaders within SoundHound. While not a requirement, acquisitions accelerate our trajectory. We find great businesses, integrate them with our strong IP and data, and provide them with the resources to thrive. This quarter, we acquired Interactions, a pioneer in customer service and workflow orchestration. We're already moving fast to combine functions, creating a comprehensive contact center and customer service offering with both automation and human-assisted capabilities. Our M&A playbook is proven and getting stronger with each integration. We're harvesting cost synergies by moving their stack into our cloud and realizing revenue synergies through cross-selling and upselling. Now, for some specific customer highlights in Q3, IT and robotics. A significant win with a large Chinese company integrating SoundHound Chat AI into double-digit millions of AI-enabled smart devices, initially for the Indian market, leveraging our strong Indian language capabilities. Automotive, deepening market penetration beyond light vehicles. We're developing a unique personality for a globally renowned sports car brand's in-vehicle assistant. Jeep Vehicles rolled out our Chat AI in Europe, and our work with EV customers like Lucid and TOG continues to show promising results, with TOG expanding into Germany. We also signed deals with prominent two-wheeler companies in India and multinational commercial fleet vehicle companies in Italy. Financial services. We continue to work with 7 of the top 10 global financial institutions, with 3 buying additional services and 2 signing renewals. We also signed a new enterprise technology deal supporting credit unions in the U.S. Energy. New contracts with a large U.S. utilities company and a Texas-based electricity provider serving millions of customers. Retail and consumer goods. A net new upsell with a major multinational brand. Through our smart answering solution, we won deals with a fast-growing global health club and a U.S.-based global franchise for elite athletes. Restaurants. We remain a market leader. Notably, we signed a deal to deploy our AI ordering solutions with a nationally recognized full-service restaurant chain. Franchise wins include Firehouse Subs, Five Guys, and McAllister's Deli. We've completed rollouts at My Pizza, Habit Burger, Red Lobster, and Torchy's Tacos, in addition to existing brands like Chipotle and Cases. Pete's Coffee expanded Employee Assist to all company-owned locations. We also introduced Voice Insights, an AI-powered solution for real-time analysis of customer and employee interactions, seeing strong interest and early adoption. Healthcare. Launched an inbound and outbound agentic AI solution with a large precision medicine provider, a first in healthcare. We also signed with a U.S. regional hospital system for the Amelia platform and renewed a relationship with a leading healthcare wholesale medical supplies company. Insurance. French insurer Pitia Cordage will deploy Amelia 7. We renewed with a global insurance company and a Mexico-based auto insurance specialist. Telecommunications. Signed a large, well-known communications provider in over 20 U.S. states. IT services. Renewed a multi-year contract and upsold one of the largest internet domain registry and web hosting companies globally. We also won a deal with a leading U.S.-based managed cybersecurity, cloud, and IT infrastructure provider. Channel partners. A strategic partnership with Teleris to bring Amelia 7 and Autonomics to their enterprise CX and EX landscape. We also signed a multi-year deal with a long-standing partner specializing in CRM and AI, entered a reseller agreement with VOZI, and formed strategic partnerships with 2 leading gym and wellness cloud management providers. Many of these successes are driven by our growing leadership in enterprise AI, specifically our agentic AI with our Agentic Plus framework. The acquisition of Interactions adds preeminent Fortune 100 companies, new patents, and strengthens our customer portfolio across various industries. Enterprise AI is a massive near-term opportunity. We are aggressively expanding our product suites and customer engagement. Amelia 7.3 has introduced capability upgrades, including major improvements to conversational latency and barging handling, delivering an even more natural and intuitive experience. Our Agentic Plus framework balances multi-agent orchestration and generative AI with essential business controls, consistently bringing use cases to market within days or weeks. It's a practical, scalable framework that brings forward-looking AI use cases into real-world operation today, delivering value and efficiency. This advanced technology is built on decades of R&D and data. Our platform is LLM agnostic and adaptable to the pace of AI innovation. Now, on to voice commerce. This is our highly anticipated solution bringing conveniences like food ordering, parking payments, and restaurant reservations into the vehicle and to other IoT devices. We've moved POCs to advanced stages with OEMs and merchants, successfully completing live voice orders and transactions. We expect full production in 2026, with 4 OEMs showing strong interest. We've also completed integration with a paid parking service provider and a restaurant reservations company. We anticipate exciting announcements early next year, and we're also in talks with 2 prominent global smart TV manufacturers to enable NTV ordering. We are nearly fully integrated with 2 tech platform giants to offer voice ordering to their millions of users, with consumer go-live imminent. This demonstrates that our technology is ready for mass adoption, even by big tech. We'll have a prominent presence at CES in January. In closing, we continue to deliver strong results. Some of the world's largest companies are coming to us for their AI goals. We are at the very beginning of addressing a massive market opportunity. We are a pioneer in voice and conversational AI, and our expertise is being recognized more and more every day. We are delivering value-driven agentic AI solutions, and we are ready to offer a voice commerce solution no other company has been able to bring to market. I'll now turn the call over to Nitesh to discuss our financial performance, growth drivers, and business outlook. Nitesh Sharan, CFO. Thank you, Keyvan. Good afternoon, everyone. Q3 revenue was $42 million, up 68% year-over-year. We continue to deliver strong growth, driven by product and technological differentiation in a rapidly expanding market. Reflecting on our performance so far this year, we have successfully delivered on the Pillar 2 scaling we anticipated, embedding our leading-edge voice and conversational AI suite deeply into a wide cross-section of market-leading services. The disruptive innovation in AI, from deep learning to agentic solutions, portends societal and economic transformation. The current epicenter of this transformation is the call center and customer service space, and our solutions are strategically positioned to capitalize. Our organic and strategic investments position us well. From full automation that outperforms humans to human assist capabilities, we support enterprises in delivering best-in-class customer support and outbound lead generation. Our agentic-first architecture leverages our own state-of-the-art models alongside best-of-breed partners. With the acquisition of Interactions, we've added workflow optimization capabilities to our enterprise agentic solutions, enabling companies to effectively adopt AI and deliver productivity gains. Our deepening partnerships are a testament that our offerings are resonating. This is the era where natural language conversations will enable more seamless human-technology interaction, and voice AI is the killer app. In Q3, Pillar 1, we extended our penetration into China with a large IT win, capitalizing on that country's lead in robotics. Restaurants, another quarter of adding 1,000 locations, notably with a leading pizza provider, and expanding beyond ordering with our employee assist and voice insight solutions, driving rapid unit and price expansion. Enterprise, steady retention and expansion rates were supported by significant improvements in customer outcomes. Our early agentic AI customers are seeing up to 10-fold improvement in containment rates, 25% higher end-user net promoter score, and 15% higher customer satisfaction, all achieved with up to 35% less effort to design and deploy. We are now consistently eclipsing 1 billion queries a month, up nearly 10x since we went public. Regarding our pace of investment, the speed of innovation has been rapid. Now, it's about accelerating adoption and customers' realization of AI's massive benefits. We are aggressively investing to fortify and expand our moats and deepen customer relationships, taking the form of go-to-market and product capability expansions. we expect to continue to keep the foot on the accelerator. Financially, we are moving from building the future to where our growth and scale fully cover our costs. As we exit 2025 and enter 2026, partly due to substantial acquisition synergies, we expect continued hypergrowth coupled with a near break-even profitability profile. Let's review the Q3 financial results. Revenue, $42 million, up 68% year-over-year. All three pillars grew double digits. We saw strength in direct sales and channel partners. Gross margin. GAAP gross margin was 43%, and non-GAAP gross margin was 59%. We're driving efficiencies in cloud spend and realizing cost savings by shifting from third-party to our own solutions. R&D expenses, $22.8 million, up 17% year-over-year, largely due to acquisitions and related headcount and data center costs. We continue to invest in innovation. Sales and marketing expenses, $16.4 million, up 96% year-over-year, primarily driven by acquisitions and our investments in the channel. G&A expenses, $24.3 million, up 43% year-over-year, primarily driven by acquisitions, including roughly $5 million in one-time M&A-related costs. We continue to drive operational efficiencies. Non-cash employee stock compensation, $19.7 million. Depreciation and amortization, $8.6 million. Adjusted EBITDA, a loss of $14.5 million. GAAP net loss, $109.3 million, significantly impacted by a non-operating, non-cash change in fair value of contingent liabilities of approximately $66 million related to acquisitions. Non-GAAP net loss, $13 million, or 3 cents per share, adjusting for items like D&A, M&A costs, and stock-based compensation. Balance sheet remains strong with cash and equivalents of $269 million and no debt. Now, let's discuss our financial outlook. For the full year 2025, we now expect revenue to be in the range of $165 million to $180 million. For Q4, we expect to be adjusted EBITDA profitable at the higher end of the revenue outlook and in the single-digit millions of loss at the lower end. We see additional acquisition cost synergies of roughly $20 million on an annual run rate basis to be realized more fully in 2026. Our early expectations for 2026 are to continue delivering high growth commensurate with recent levels, with near break-even profitability. We want to reinvest where we foresee outsized returns, as AI is fundamentally transformative. We have the assets and capabilities, and we will stay aggressive. With that, we will now move to Q&A. Q&A session, Chinese robotics deal. The deal is with a robotics company, not for a humanoid robot specifically, but it paves the way for such experiences. The product is more like a wearable device. The double-digit million commitment is expected over the next 2 to 3 years, and is a firm commitment. Interactions acquisition. This acquisition offers great potential for deeper engagement within our enterprise vertical, complementing our automotive, tech services, and retail sectors. It enhances complex enterprise use cases in financial services and healthcare. We expect growth from this acquisition, and it's factored into our updated outlook, leading to a slight increase, especially for next year. Amelia revenue mix, term license versus SaaS. We continue to grow our recurring footprint with Amelia, with a much smaller footprint of one-time license deals this quarter. The trend is increasingly towards recurring, outcome-based contracts and pricing, where economic models are advantageous as we scale. This includes recurring, plus outcome-based generative or incremental revenue. Some pricing is fixed per location, with more customers sharing economic upside based on real returns. Amelia 7 upgrades. We are continuing to grow the number of customers committed to upgrading to Amelia 7. The initial early adopter cohort has progressed well, and this number is increasing. Our goal is to have about 75% of our customers transition to Amelia 7 by mid-next year, ensuring a smooth transition for all. We are seeing great momentum, positive feedback on NPS and customer satisfaction, and improvements in containment rates. Recurring revenue percentage. The vast majority of our revenue is recurring. In automotive, revenue is recognized as cars are shipped and through royalties. Amelia is largely recurring on a SaaS model. We also recognize revenue for edge solutions upon license transfer. We are increasingly moving towards outcome-based pricing as our AI solutions deliver more value and align with customer economic interests. Capacity across verticals. We are a horizontal platform with a foundational vision in voice AI. We excel in speech recognition and real-time speech understanding. Our focus remains on conversational and voice AI. We navigate industry-specific workflow needs through thoughtful partnerships and by leveraging our platform capabilities. We are smart with our limited resources, which enforces prioritization and keeps us focused on our core competencies. Voice commerce launch in 2026. The rollout involves significant work from us in the integration of voice AI and merchant experience. OEMs need to implement their parts. We will have more to show at CES and hopefully share more about the timing of an actual go-live in production around that time. Competitive environment and moat. The space is attractive and growing. We feel we are the leader in enterprise AI and customer service due to our 20 years of innovation and our own technology. Many new players use third-party APIs and models, which are good for POCs but can have production issues. We can go from demo to production faster with higher quality, lower cost, and better accuracy and latency. Some potential competitors may even become our customers, as models like Polaris outperform others. Pricing pressure. Generally, as we transition from old to new technology, there's pressure on legacy providers. We are showcasing innovation to illustrate value and maintain our pricing. Our focus on innovation, including generative AI, is essential for remaining competitive. Pricing structures are shifting, and those delivering true innovation and quality can achieve increased average selling prices. We are navigating complexities on both sides of this pricing dynamic. Outro. Thank you for your participation in today's conference. This concludes the Q&A session. Music fades in.